Capital importation into Nigeria rose to $2.60 billion in the second quarter of 2024, reflecting a remarkable 152.81% increase from the $1.03 billion recorded in the same quarter of 2023. However, this figure represents a 22.85% decline from the $3.38 billion achieved in the first quarter of 2024. The National Bureau of Statistics reported these figures are highlighting ongoing fluctuations in investor sentiment amid global economic challenges or uncertainties, including domestic issues. So this morning I have Oladipo Ajayi, Head of Fixed Income and FX, Chapel Hill Denham Securities Limited, to further unpack this particular developing story. You're welcome, Oladipo.
Yeah, good morning, Lekon. Thank you very much for having me.
You're welcome. So let's put this in perspective by even understanding why did capital importation into Nigeria experience such as some people have called it, significant increase in quarter 2 2024. Are there factors that actually contributed to this surge?
Well, if you want to trace this back, the last time we had these kind of numbers, aside what we saw in Q1 this year, I think that could be traced back to the first quarter of 2020. So it means that since then, we've been having a situation whereby the capital importation into Nigeria has been dropping aggressively. So, and I'm sure that's one of the reasons why when we saw the figure, 2.6 billion, it sounds great, or it actually sounds that, oh, that means we're on the right path, and we are currently still attracting foreign investment into the country. And capital position is basically the FPI, FDI, and other investment inflow into the country. So, and if you look at the dynamics of these 2.6 billion, you will notice that the major part of it comes from investment into money markets, and don't forget that the central bank has been very, very aggressive since the beginning of the year. Even in the last 2 weeks, the central bank has been in the market to offer home auction about 3 times, and so it is one of the ways to actually bring foreign inflow into the markets, and I think that's one of the things that actually spurred that huge increase that we saw when we compare year on year to what happened last year. Because last year, interest rate was very low. So it's not enough to actually attract most of this foreign inflow into the market. And but since the beginning of the year, we're seeing more like a change in the dynamics of the monetary policy guys. And some of these dynamics is what is actually attracting this level of people into the country. And aside that, also another huge poacher of inflow into the economy is more like loans. And I'm sure you've heard severally where the federal government has been speaking with World Bank, and some of these international financial institutions are actually arranging loans. Some of these things are some of the things that actually count under this headline, and that's one of the reasons why we've seen this level of improvement.
Okay, so you talked about the fact that compared to the previous quarter, we saw a bit of decline. It wasn't that encouraging as it was as then compared to now. But then, what are the implications of probably a decline in capital importation when you do a comparison between quarter 1 of 2024 and quarter 2 of 2024?
So what it simply means is that you have not been able to actually maintain the momentum, and sometimes there could be outlier events. Maybe the early part of the year, you have huge borrowing, maybe from World Bank, or there's an issuance of Euro bonds. Some of these things actually count under these headlines, and it could actually lead to one of the reasons why you see that sharp drop that we have seen. And also another thing is that the central bank was not that very, very aggressive in the second quarter of the year compared to what we saw at the beginning of the year. The first 2 months. The second one and the third month of the year was a very aggressive one on the part of the central bank, and that actually attracted a lot of inflows into the economy. And but when you compare it to what we have seen in Q2 was not that aggressive on the part of the central bank, and that could also be one of the reasons why why we saw that decline. And also another angle to it also is the performance also of the Nigeria NGS, that's stock exchange, because in Q1 we saw the stock exchange performance was actually very extraordinary. The return was over 30%, and but what we've been seeing in the Q2 and Q3 were more like a marginal decrease in performance, and so it means that at the beginning part of the year, a lot of this foreign inflow came also into that market, and also so these are some of the things that could actually lead to that drop that we have seen because of the level of activity in each of the quarters.
Okay, so you talked about the Apex Bank not being aggressive enough as one of the reasons Nigeria couldn't actually sustain the momentum of capital inflows. What sort of aggressiveness would you be anticipating, or you didn't see as regards your expectation, that probably would have helped these numbers increase?
So what I mean is that I said that when you compare the two quarters, the aggression that they actually brought to the table in Q2 was not as much as what we saw in Q1. If you remember in Q1, in the month of February, the Apex, the monetary policy guys, they raised interest rate by 400 basis points, and just 30 days later, they did another 200 basis points. And what that did to the market was more like a surge in return, and that surge in return also help the activity that we saw in that segment of the market. So I think it's something that led to that. So it's not that the central bank has not been very hawkish. They were hawkish, but not as much as what we saw at the beginning of the year. That's what I was trying to say.
All right. So now, according to what we tracked, the primary driver of this growth was the portfolio investments, which contributed about $1.40 billion, accounting for 53.93% of total inflows. So were there any particular sectors or maybe asset classes that you would say attracted investors more?
And that's what I was saying earlier on. The main is the money market. And when you're talking about money market, you are talking about the OMO bills, treasury bills. So they are more like the short-dated segment of the market because that's attracted about $1.07 billion. And when you compare $1.07 to the total $2.6 billion, I'm sure it's very close to about 40% of the whole, the whole number. So it is that segment of the market that actually attracted that huge inflow. And that's one of the reasons why I said that the aggressiveness of the monetary policy guys in the beginning of the year was much. And that's one of the reasons why we saw more inflow in that segment of market compared to the second quarter.
So then are there any potential risks associated with having to heavily rely on portfolio investments?
Of course, portfolio investment, they are more like they are worth more money. And let me just give you an instance. Sometimes I think it was 2022, thereabout, just in the month of February, March, the Egyptian pound lost about 25%, 20 to 25%. Just in one day. And what led to that is what we call capital reversal. So because at that particular point in time, it was Egypt, Kenya that were enjoying a foreign inflow, because at that time, that was when there was huge disparity between what is happening in our official market and the parallel market. So most foreign guys, they were actually staying out of the market. So the destination was Egypt as number one. And but when there was time and the US Fed started tightening up, we saw huge capital reversal leaving the economy, and the currency actually suffered. And as we speak, Egypt has not actually recovered from that. So one portfolio investment is not something that you rely on to develop your economy. And that's one of the reasons why a lot of people believe in FDI, foreign direct investment, and foreign portfolio investment. But what foreign portfolio investment can do is more like a stabilizer. It can give you room to actually stabilize your economy while you are doing other things to ensure that you retain or you attract a long-term fund. And because one thing that you need to grow an economy is more like patient capital. And when you're looking for patient capital, foreign portfolio investors, they are not one.
Okay, so now a lot of people are actually, questioning the possibility of Nigeria diversifying its sources of capital inflows. Earlier on, you talked about the fluctuation in terms of performance of the NGX, and I'm wondering, looking at that, probably some other areas that can provide a bit of stability. What are the probably advice you would give or solutions you would profile?
Well, I think there's a lot of things we need to do, Lekon, and the first thing on the table is currency stability, and because that's very key on the table of any investor. And I can tell you that one of the reasons why we saw that big number in Q1 was a lot of foreign investors were already thinking that with the aggressive policy of the monetary policy that's in Q1, maybe that would have been able to rein in that level of stability for the currency. But instead of that, we'll be seeing more like a very volatile currency. This same currency opened at like about 990 at the beginning of the year. Here now, we're around very close to 1,700. So this is a concern to any investor that wants to come to your economy, your market, because they want to ensure that everything that comes in form of return on the asset class will not be wiped away as a result of exchange rate law. So we need to sort that if we really want to actually ensure that we attract a huge level of inflows to the economy. And aside that also, I saw a report where the government is saying by 2025, they are looking at improving oil production to about 2.3 million barrels per day. And I tell you that sounds like one of the best things we need to do in such a time like this. I remember many years ago, we used to produce about 2.4 million barrels per day. That is excluding the condensate. And imagine now a country where the population has grown more than where we were before. We are barely can produce 1.7, 1.8 million barrels as we speak now. So it tells you one of the reasons why we've been having huge pressure on the currency, because when you compare Nigeria is more like an import-dependent economy. So it means that at any point in time, we will always be in need of dollars. And you cannot give what you don't have. So it simply means that the little available dollar, that is what everybody is now struggling to get. And as a result of that, it becomes the highest bidder get the currency. And that's one of the reasons why we're seeing that huge volatility. So we need to look beyond stability and also look at a way to actually improve production. And aside that also, I think the mining sector is also a huge gold mine for Nigeria as a nation. We need to walk around that. We need to find a way to actually translate and move beyond that extraction into production. Because one of the things that African is known for is that we are known to actually just export crude products without actually adding value so as to be able to get better return on it. You can imagine a country like many countries in Africa will export cocoa to go and import chocolate, and it doesn't make any sense. And just before now Nigeria was just we were just liberated from actually extracting crude oil, exporting it, and buying refined product back into the country. So these are some of the things that is actually putting pressure on the economy. So we need to work around that. Develop the mining sector, ensure that you actually develop the agricultural sector. Also, this will help to actually create more like a diversification room for the sole reliance on oil. And also the gas industry is something that we need to also look at a way to actually further improve how we can actually generate revenue from that segment of the market. I've been seeing how the government can be pitching around CNG, where they want people to move from more like wholesale fuel to more like CNG. It's also another way to actually improve demand in that segment of the market. And I think these are some of the things that we need to do on huge scale, so that to be able to generate more effects and be able to stabilize our economy.
So a lot of things have actually said now that the Nigerian government can do if it hopes to liberalize or open up its economy for growth and for investments. And we've seen the president over time engage with our foreign partners, talk to a lot of investors in different continents, in different countries. Are these investors, where they are seeing these things that you are saying in terms of the potential, the challenges, the possibility of overcoming those challenges? Because we can't come around and say these are the things that need to be done. The government can come out and say, okay, these are the things I'm going to do. But the investors will also be looking at the body language of the government, and if the government has the capabilities with the different fronts it's been getting from the international community in forms of grants and loans and all that to tackle these issues, but we still have those issues still on ground. Do they feel optimistic about the Nigerian markets?
You see, one thing about Nigerian markets is that you have a lot of value. So foreign investors are just looking for us to get our hearts together. And I'm telling you, you see them rushing in aggressively into the economy. And just like what you have said, the president will have several meetings. But we've not been seeing most of these. Of course, we have seen a lot of commitment, but we've not seen most of this commitment being turned to reality. And one of the reasons I've mentioned to you, Lekon, earlier on, because imagine you as an investor, you have committed in January, where the currency is at 1,000 naira. Now the currency is at 1,700 naira. So it means that if I had come in January, I would have lost 70% in form of exchange loss. You know, these are some of the things that most investors are actually looking at. They are looking at a time when we get our heart together, we sort the issue currently on hand, but that there's value in our economy. I can tell you that for sure, that there's a lot of value in the Nigerian economy. And also, the ease of doing business is also a factor that we also need to consider. And security also is another factor we need to consider. We'll be seeing the government actually, the president talk about the oil and gas sector, how he's trying to actually attract investors into that segment of the market. And that is very good, that's very great. And I think that we don't need to only focus on that segment of the market. As much as we are doing that, we can do this thing at the same time. As much as you're doing that, you can look at what is happening in the mining sector. How can you attract investors to that segment of the market? What are the ideas? What are the things? You can even have a conference where you bring foreign investors onto the table and you guys discuss, you actually discuss around, okay, what do we need to do? How do you think we need to do so as to be able to get value out of some of these things? These are some of the ways that we can actually warm ourselves into the heart of some of these investors, and that they will come. I know they will come, but when they will come has always been the problem.
The problem.
They are just standing. Well, they are standing at the doorstep, waiting for us to get our hearts together.
Well, basically, yeah, that's it. Now, we've talked about some sectors of the economy. Let's look at the production and the manufacturing sector, which actually attracted $624.71 billion, accounting for roughly 23.99%. But then this sector has, in the last couple of weeks, decried the policies of government, saying it's been a lot of struggle staying afloat. So that particular achievement in terms of, its contribution and, of course, the gain, so to speak, does this increase, so to speak, signal a potential recovery in the industrial activities that we're seeing right there?
Well, the only thing that's been holding the industrial activities in this country is the FX instability. Because if you look at most of these guys, you check their book, a lot of them, what has been the monster in their book has been FX law. If you look at Dangote Sugar, you look at aside Unilever, you look at Nestle, look at MTN. Most of these guys, they posted huge FX loss. And that has been more like the monster that has been actually affecting their business. So it simply means that if there's FX stability, you tend to see that huge value that these people would have brought to the table. And without that, you saw what happened. And like I said, investors are still looking at the Nigerian market. And if you look at what happened with international building, their parent company brought close to about $400 million into the economy. I think that was Q2, just to actually increase their investment in the country. You cannot bring as much as $400 million into a company that you don't have trust in. As we speak, Nigerian buildings in the market on their right issue, I think it's closing today or it closed yesterday. And you expect the parent company to actually bring inflowing funds into the economy, and this is on the back of the trust they have in the business segment where they actually operate. So, like I said, it's just the effect that's been more like the problem for most of these guys. Because when you talk about what is happening in the PMS space. Most of them, they are not affected because they've been running on diesel, and these two prices have been constant. Even as we speak, I think the prices have dropped aggressively because at the time it touched the high of about 1,700, but now it averaged around 1,100. So it means that they have better way to actually produce at a lower cost than where they were before. But the problem has always been the effects. And I think immediately the government stopped that, we will likely see more inflow into that segment of the economy.
Okay, so while you were talking, you talked about the mining sector, the oil sector, the potential that they have. And basically, we all understand that to get more FX and to shore up the value of the Naira, there's a need for the increase of production to improve the level on that side. But then there have been talks around internal sabotage on the part of those who are actually benefiting from the economic malaise that the country is faced with. And the government has tried as much as possible, most especially in the oil sector, to deal with the issue around oil theft and around pipeline vandalism. The mining sector, they're coming up with policies and different initiatives to also deal with those who are actually clogging the wheels of growth in that particular sector. But then when we have those who are internally sabotaging the efforts of government, is there a way that, we can deal with those people to actually free the country from the shackles that it's in?
I think, firstly, I think the government needs to do more because we can't continue to say that there's oil theft, there are people sabotaging what is happening in that industry. And the government will continue to give excuse. And that is why it is government. Government needs to ensure that the full wrath of the law comes upon anybody that is found wanted in that regard. And one of the reasons why we continue to see these things is because what has been the punitive action taken against those people that were caught in the act? Nothing tangible, nothing extraordinary, and I'm not sure there's anybody that is aware of anything that's happened to anybody. So we need to ensure that we need to walk the talk. We can't continue to say that this thing is wrong, but we are not putting punitive action in place for us to actually correct or ensure that anybody that is found wanting is heavily punished for in that regard. And also, another thing also is that we need to move beyond the level of operational way that we have been doing things. And that you go to other advanced nations, you go to Saudi Arabia, there's a way that they operate. Everything, even in just one room, you can see what is happening in all the pipeline. You can see where there's vandalism. You can see where things is happening. You can see how things is happening. We can't continue to work in the old way when there are better ways to actually do this thing. And I'm sure that if the government is ready to actually invest, because what we need to invest cannot be compared to what we are losing on a daily basis. And if government is ready to do that, I'm sure they would do that. Because if you do that, what that would do is that it would, at least to a great extent, reduce this thing to the barest minimum. And what it would do is that it will increase output. We've seen situations whereby you hear that, they caught cargoes on the sea, and all we did was to just set the cargo ablaze.
On fire.
I don't understand. Have you thought about to look at who are those people behind this thing? Have you been able to actually investigate to narrow it to the masterminder of such act? So if you are ready to work, I know that we will do things. For me, I don't think the government is ready to work in that regard.
Well, I tell you, a lot of things or measures that the government would need to exert in terms of force when it comes to dealing with the bottleneck, so to speak, if it hopes, really hoping to actually liberate its economy. We're looking at an economy that, according to predictions, might be dropping to the fourth on the continent, and other economies like South Africa will be taking the top spot. But then we're still looking at the same economy that's trying to drive the $1 trillion template. But then a lot of work will need to go into that. Oladipo Ajayi, head of fixed income and FX, Chapel Hill Denham Securities Limited. Thank you so much for your time on the show.
You're welcome. Thank you very much for having me in this morning, Leko.
You're welcome.